Hello, everyone. Welcome. We're live here. My name is Chris Acheson with MVP Realty in the Southwest Florida RE Group, the #1 team in Southwest Florida. Welcome back to my channel. To all those watching on YouTube and Instagram. And today, as you can see, I'm joined by Rosa Madrid, expert local mortgage lender here in Southwest Florida with Movement Mortgage. Good to see you, Rosa. How you doing?
Hey Chris, good to see you. Thanks for having me on here.
Oh yeah, no worries. So I'm really excited for all you viewers out there today, just because this week, once again, our goal is to help everyone, whether they're future, past, or current clients, or just homeowners out there, whoever, renters, first-time home buyers, and Rosa and I are really excited about today's topic. It's very important, and it's obviously a hot topic and related to the COVID-19 buying and selling real estate environment, and that is mortgage forbearance, right? And I'm sure you might have heard this term being thrown around. What is it? What are the consequences of it? Is it something we should leverage? You should leverage as a homeowner. And there's a lot of misconceptions out there, and the information's scattered. So just wanted to get an expert here, Rosa, to talk a little bit about mortgage forbearance for all you folks out there. And so I'm just going to ask her a couple questions here. So just the first question, we'll just jump right into it here. What is mortgage forbearance, Rosa?
Yeah, so great question. And, I'm going to preface this too, as this applies to just anyone, that friends and family, I've been calling my database too and just making sure they understand what's going on, and luckily most of them have not been affected, but they do have friends and family that have been. So they've been passing on the information. So just want to preface, please share this information with friends and family. There's a lot of bad information going out on social media, obviously, and we just want to make sure we get the right information in their hands. So great question. What is mortgage forbearance? Basically, that is an agreement that you have with the servicer, who's essentially the person that's collecting your mortgage payments every month. And it's an agreement that you have to try to prevent foreclosure. So typically foreclosure process will start anywhere between 90 to 120 days after missing that many mortgage payments, and that process will start. And so forbearance is essentially an agreement to try to prevent that process. And depending on, the servicer, which we'll get into a little bit more here on these questions, is an agreement to try to delay that foreclosure process. And it's essentially try to give some grace on the payments. But what we'll learn later is that not all forbearance is created equally.
Right, right. So, the next question that I got from one of my prospective clients was, does forbearance actually erase what you owe? How does it how do they tack it on? Do they tack it on to the end of it? Is it due in month 4 or 6, or how does that work?
Right. So there's definitely a couple options out there. And again, you'll have to contact your servicer to find out what their options are for you. There are some that will require that those payments due on the third or fourth month, depending on when that is, or that agreement. And they basically want a lump sum of all the payments that you haven't paid yet. And especially speaking as maybe a first-time home buyer that's just bought their home maybe the last year or so, most people are not going to be in the position to be able to just cash out or dish out a lump sum in
Right.
3 or 4 months, with that agreement. Others are willing to tack on those payments at the end of the mortgage, essentially extend the loan term by a couple months, and essentially you make those payments then. So it all just depends on which servicer you have and what their options are. So definitely encourage you guys to do your research on that, and really research heavily on that before you decide to go ahead and do that. Don't assume that you are granted forbearance. Don't just not call and just stop
Right.
making payments, because it's not that easy. So definitely encourage you to give them a call.
So what types of loans qualify for forbearance? FHA, conventional, VA, USDA?
Yeah, so another great question. Technically, they all should. It'll go back to reaching out to the servicer, again, on what their options are. So if you are in a situation and you're asking yourself, well, what's the difference maybe between conventional or if I have a government loan, it all goes back to really at that point, the servicer and what their options are in general for anyone that's carrying the loan. We definitely want to make sure that you, again, research your options, like I said, and I'll just throw this in there too quickly, because I know we wanted to talk about it as far as, who's this program for? Who is this option for? And what I really want to stress out there is, if you can make your mortgage payment, please make your mortgage payment. Right now, 1 in every 17 mortgages is in forbearance. And It's inevitable. I know there's people out there taking advantage of this, right? And they're able to make their payments, but what you don't understand is you're doing a disservice. Obviously this is not a housing crisis. We've talked about that a little bit, and if you look at any of our videos or content that we put out there, but what does cause a housing crisis is people not paying, not being able to pay payments, that causing the house values to go down, essentially because they can't get rid of these mortgages. So it's a long-term chain reaction. And what happens is like people have to get paid, right? So, that investor, whoever buys your mortgage loan, they have to pay the person they sold it to. And eventually it trickles down to back to the public where we are the ones essentially purchasing mortgage bonds, depending on how your 401k is structured, and you're making dividends, it's going back into your retirement savings based on
Right.
people making payments on the agreements they agreed upon. And while I don't want to shame anyone at all, if you do have to go through this, because it is a great tool, if you have to be in that position, or if you're in that part where you're not sure where your next paycheck's going to come in, please, by all means, call them. But if you can pay your mortgage, we really want to stress that, you do in these times.
Right. That makes sense. Is there any impact on interest rates for this, or as it relates to forbearance, or that's just kind of
Yeah,
static?
so great question. Obviously when you're going through this process too, like what'll typically happen also before the foreclosure process is you can sometimes do what's called a modification. Again, this can potentially affect you buying a home in the future, especially if you miss a payment too. So I'll go into that real quick. But yes, so interest rate, technically you signed a note with your interest rate and the payment that you agreed to pay upon. So in the forbearance service agreement, that you do with your servicer, it should not affect your interest rate, because you did sign for a fixed mortgage. But you will, let's say like the payments are paid later, you will still pay interest on that sum of money, whether it's, at the end of the loan or all in one chunk after 3 or 4 months. So that is one of those things that, would be impacted. You're still going to pay interest on that.
Right.
So yeah, so basically, I mean, I know we were going to talk a little bit about like homeowners who are facing it. Again, I do highly encourage that people go into that servicer and ask them or call them, and see really what your options are. But yes, interest will always be paid. Unfortunately, there's no giveaways, right?
No
In this
free
world.
picks there. Yeah.
Yeah.
And the other one thing that I wanted to just bring up with you, Rosa, was all these kind of stories we're hearing from sellers out there that are actually trying to sell their home and then buy another home, but they're putting their home into forbearance. What do you recommend to sellers that are thinking about going into forbearance that are actually planning on buying after they sell?
Yeah, and great question. So let's talk about that a little bit. Let's talk about the repercussions about forbearance and things like this that could potentially happen to you that I've seen maybe in past clients. When Irma came through, you had to physically show proof of hardship, with that type of forbearance. And even then, I had clients that did that or filled out the paperwork, and they still reported them late on the credit report. While they may have been in okay standings with the servicer, that credit report still showed late payments for that time. And again, this is why I asked you to clarify with your servicer, is this going to show late on my credit report? Are they going to 100% just tack that on, to the end of the mortgage term? Because the problem that, you have is if you don't have something like, in writing or a really clear agreement on what those forbearance terms are, is, you could definitely be in a situation where you're showing a late payment on your credit, which will most definitely prohibit you from qualifying right away for a mortgage. So that was one of the things that I saw from clients in Irma, and it's something to be, thinking about right now. So if you're thinking about selling your home soon and you're maybe potentially thinking about going into forbearance, you might want to think twice, because you just don't know how that's going to affect your credit. Unfortunately, I don't feel like there's guarantees with servicers sometimes in that kind of regard, as far as to what they can promise and what they can't promise over the phone. So
Right.
that is one of the things that, you got to be careful of. So as a seller, yes, like, we want to make sure, and we want to make sure realtors also are having that conversation as to just inquiring and seeing where they're at. If they have started a forbearance process, it's going to potentially prohibit you from qualifying for a new mortgage maybe that month, or if you're doing it soon. So you want to really think about that before you go into forbearance. Yes, potentially it could affect sellers and buying and their future buying power too. So that's, yeah, great question. And I think people need to take that in consideration. I think people don't realize that it can really affect your credit, and that stuff stays on there for a really long time. So
Right.
definitely want to make sure you check that out before you go through with it.
All right. Well, thank you everyone for watching, and that's about all the time we have for today. So feel free to comment below. Feel free to like this video, share with your friends, and if you have any questions, feel free to reach out to me. My number is 609-634-4419. And what's a good contact number for you, Rosa?
Yeah, you guys can reach me at 239-821-5661. My email is rosa.madrid@movement.com.
All right. Well, take care, everyone. Stay safe, be healthy, be careful, and we'll see you next week. Thanks a lot. Take care.
Thank you, guys.